The new report which Hindenburg has put in the place and which has created a lot of controversy in India.
It's another bombshell from Hindenburg. First they targeted the Adani Group, now they're going after the Indian regulator.
Hindenburg claims that SEBI has been reluctant to probe Adani because of chairperson's involvement.
Hey everyone, welcome back to the channel where we simplify the complex world. Today what we are simplifying is making waves around India and the world. It involves Hindenburg Research, the Adani Group and the SEBI. Trust me, this is something you don't want to miss. So what is Hindenburg Research and why is everyone talking about it? Well, Hindenburg is an American firm known for its aggressive tactics in the market research. They dig deep into the big companies and business tycoons, find potential corporate misconducts and then basically publish a detailed report about it. And they also make money by betting against these companies' stocks, a tactic known as short selling. Now if you remember, Hindenburg made big headlines last year when they released a shocking report on Adani Group, one of India's biggest conglomerates. They accused Adani of stock manipulation and fraud, claiming that the company used shell companies to artificially inflate the stock prices. SEBI, India's market watchdog, was given task for investigating these claims. But after their investigation, SEBI dismissed Hindenburg's allegations, saying that there was not enough evidence to prove it. Hindenburg now is not backing down. In fact, they are back with the new report and this time they are against the SEBI itself. The latest report alleges that SEBI's chairperson Madhabi Puri and her husband are involved in a serious conflict of interest. According to Hindenburg, SEBI didn't properly investigate the Adani Group because she and her husband had invested in a fund that is linked to Adani Group. Let's break down these allegations. First, Hindenburg claims that Madhabi Puri and her husband invested in a fund called IP Plus back in 2015. This fund, which is based in Mauritius, a known tax haven, is allegedly connected to the Adani Group. Hindenburg suggests that Adani used this fund to manipulate stock prices and avoid paying taxes. Now here it becomes even more serious. Hindenburg says that because of these investments, SEBI's investigation into Adani was biased. They are accusing SEBI of turning a blind eye to Adani's wrongdoings because its own chairperson had a financial interest in the outcome. So what happened after these allegations came to light? Well, as you might expect, the stock market reacted quickly. Shares of Adani Ports, Adani Total Gas and Adani Enterprises all taking a big hit. This kind of volatility shows just how much power a report like this can have, especially when it's targeting such a big player in the market. But SEBI and the Bush family did not stay silent. They have responded to Hindenburg's claims and their defense is pretty straightforward. They have clarified that the investments in the IP fund were made way back in 2015, long before Madhabi took her position at SEBI. They also emphasized that the Bush got rid of the fund in 2018, 4 years before she became SEBI's chairperson. According to them, there's no conflict of interest. They argue that their investments with the fund had absolutely no bearing on SEBI's investigation into Adani Group, and they're standing firm on that point. Now let's talk about why this matters for everyone. If these allegations against SEBI or its chairperson turn out to be true, it could be disastrous for the confidence which the investors have in Indian market. If the public starts to doubt SEBI, which is supposed to be the watchdog that keeps the market fair and transparent, could lead to a massive loss of trust, not just among Indian investors, but also among global investors who have put their money into Indian markets. Think about it, India's stock market is the 4th largest in the world and millions of people have a stake in it. Any erosion of trust could have a far-reaching consequences, potentially leading to reduced foreign investments and also increased market instability. This is not the first time Hindenburg has gone after the Adani Group. Their previous report accused Adani of stock manipulation, which SEBI investigated and ultimately dismissed. Now Hindenburg is suggesting that SEBI's investigation was flawed from the start. This raises questions about the effectiveness of regulatory oversight in India and whether SEBI is truly independent in its operations. One of the key takeaways from Hindenburg report is the spotlight it puts on the use of complex financial structures by billionaires to manage their investments. In Adani's case, Hindenburg claims that these structures were used to manipulate the market and avoid taxes. But this is something that's not unique to Adani Group. It's a tactic that's used by many wealthy individuals and corporations around the world. This brings up a larger question: are the regulatory bodies like SEBI equipped to handle such a complex financial matter? And if not, what does that mean for the integrity of the market as a whole? The allegations from Hindenburg are very serious and they are not going to disappear overnight. SEBI and the Indian government will need to address these claims, and we'll have to watch closely to see how everything unfolds. For investors both in India and global, this story is a reminder of the importance of transparency and trust in the markets. It's also a wake-up call about the potential risks that are involved in complex financial structures and the need for the vigilant oversight. If you found this video helpful, please don't forget to hit that like button and subscribe to the channel for more content like this, where we simplify the complex world. Let me know in the comments what you think about the situation. Do you believe the allegations or do you think there's more to the story? Thanks for watching and I'll see you in the next video.